Welcome to this webinar called 10 Trading Lies Keeping You Away from Making Money. As usual, a quick disclaimer. So this is not an investment advice. Please do your own research, and I do not take responsibilities for potential losses incurred. And first thing first, wait for the end of this webinar when I will reveal something. So through this webinar, I will go through interesting stories that I've been having over the last 9-10 years, doing some trading education, mostly about trading and lies. And I can tell you, after 9 years now, so I started doing trading education in 2014. I have seen all the dirty tricks and lies used by brokers and educators. So first thing first, let's start with my background. So I started to work in the industry from 2000 onwards. I started in Paris, working for a company called Pierre Charon Gestion / DTAM. We had roughly 50 million euros under management. I was there for 4 years. Then I moved to London. I started first working for a hedge fund called Griffin Capital Management, both on the long-only product and on the long-short product, where the assets went from 150 million euros to 600 million euros for the western part, and there was an eastern part which was managing roughly 2 billion something. From 2009 to 2018, and since the restart of January 2021, I've been a prop trader at Infinity Capital Market, which is the UK subsidiary of a New York company called First New York, where I'm running an absolute return mandate with no assets and region constraints. And since 2014, I've been a senior mentor for retail traders mostly, and for professional traders. First for another company where I worked from 2014 to 2017. And since 2018, I'm running my own business for education. So let's start with what is the most important thing first, which is we need to figure out who is believing in all those lies. So who is the average trader? So first thing first, if you are watching today, or if you are watching later on YouTube, there is a 90% chance that you'll be a man. And you're going to have 3 different profiles, and I can confirm that through the almost 10 years of trading education. So either you're going to be in your 20s and you want to be working in the industry, so you look at the industry like superheroes. You want to be doing trading, you want to be sales trading, you want to be working for a bank, you want to be working for a hedge fund or for prop trading. And then you get the second type of people that are buying the lies, which are men in their 30s. Most of the time you'll have a comfortable job, so you'll be making enough money and you're thinking, what can I be doing with that extra money? Then you're going to have the last part of the men story, which is the people in their 40s, where you're going to have some money. You don't know what to do with it. You know that the retirement is coming in the next 20 to 30 years. And you're not very confident in putting that money to either passive investment or to some other people managing your own money. So this is for the 3 types of people. Why is it so important? Because, all the lies that have been done through the brokers, through the trading educators, are mostly based on the fact that 90% of you are men. And that is very important. And how I can tell you that is, in 2014, I discovered the trading education. I had absolutely no idea about what it was. From time to time, you will have documents on TVs in the UK that will be on the BBC or on ITV, where they will tell you, how successful or what you should be doing to be a successful traders. And most of the time, what I do is I don't even watch, because it's very boring and it's very far away from the retail education, and not from the retail education, but from the real world of traders. So in 2014, I get contacted by trading education company to do and to mentor some retail traders. And my first reaction, I had literally no idea. And one of my friends told me, that he knew that company, was not very impressed by the guy running it, but it was mostly to learn about what was the marketing and what was the trading education. It was pretty right on this. And let me tell you about, my first nights with the guys there, which was, in 2014. It was in Shoreditch, if you know a bit of London. And we had the night with the salespeople there. And the salespeople were the Essex boys. So if you know a bit about Essex boys, this is mostly about, selling, making money. And that told me already, what I was about to meet, which was, trading education and what was the positioning. So you have to be very aggressive with young men and be selling those products and create very quickly some frustration from people. So similarly, in 2015, with that previous company, there was a big webinar for retail traders in London, and that was my first encounter with retail traders. And I can tell you that 99% of the people there were men, and most of them were men in their between 20 and 35. And again, that is really important. Because, if you look even at my YouTube channel and who are watching my videos, and so that means this is the average trader. So you can see here, 80. Let me highlight here. So 18 to 24, meaning anything below 34 years old, which is making 75% of the viewers, which is making literally the big chunk of what is retail trading, and 92% of the men. So let me go here, 92% of the men. So that is really, again, 70% of you are male under 35. And unfortunately, you will fall for all the tricks of the pretending successful trader. So you'll be going for the supercars, you're going to be going for the jets, for the girls, for the sunglasses, for the traveling, for the pictures in Dubai, for the New York pictures. And the biggest lack of all is you are just paying for those people's lifestyle. So many of you will come later and to me and say, Greg, you were wrong. But I think, today we're going to be discussing all those, some of those lies, because obviously there are many more lies. So let's start with trading lie number one, which is trading is easy. And that's something that I've been using over the years. And why is it so easy? So the first thing is people, both the brokers and the educators want you to believe that with trading, you're going to be making quick money. And they are playing with your desperation and creating frustration. So if you are in your 20s, obviously you want money and you want money quickly. And as an educator, what you are telling people is, with me, you're going to have great returns. So it's not going to be like the 5% T-bill that you're having these days, or not even the 10% of a Ponzi scheme like Madoff, but you're going to be targeting 50 to 100%. And obviously, another big lie is it's going to be easy to do that with having another job in the same time. And that way you're going to be collecting extra revenue. So it's going to be taking a few hours or even a few minutes each day. And you can have very high returns. And again, that creates desperation. So you just need a laptop, an iPhone, or you can do that from anywhere. So if you look at number 2 and number 3, this is clearly targeting the man. What about you going to be making easy bucks when still having a job? The confirmation is, if you look at YouTube, how many videos you're going to have with those guys telling you they made millions in the first 2 hours in the morning trading FX. I think there is this guy on YouTube always doing, actually he's got the same name as me. We're always pretending that he's been trading FX for the last 30 years very successfully, and he's only trading 2 hours every morning, and that is making the day. So the lie is obviously to be getting big returns. And again, if you are in your 20s, which you are making, between 70 to 80% of the retail traders, I guess you want to be traveling, right? You want to be go traveling. You want apparently to get perspective. And there is nothing better to trade when you're on the beach for 2 hours in the morning. But unfortunately, we're going to be covering more of those lies more in detail. So trading number 2, the magic strat, which stands for the magic strategy. Those are the YouTube videos that funny titles that I found. So the first one, this simple strategy, has an 89% winning rate. Second one, magic strategy, 99% winning rate. So you start to see that there is a bit of trend here, which is your winning rate. You need to have a very high winning rate. Meaning, in other words, with the strategy that people are selling you, you can't be losing. And the best trading strategy, you're going to be earning 6 figures. You're going to be very successful. And obviously, you are in your 20s, so you are hoping to be making something like 100 to 200 to 1 million. And you want to become and to get rich quickly. Or you can make millions with a super easy trading strategy. Or finally, there are some educators that you will tell you that you're going to be making quick money by trading penny stocks. And the reality, why trading penny stocks? Because obviously when the stock goes from 0.9 to 0.95, that is 5% move, and you think you're going to be making a killing. So the magic strategy, let me give you 2 examples, because I think, you know, most of you will be starting with the magic technical analysis signals, and that goes from the RSI, the MACD, the Bollinger, the moving averages. And we know, and you're going to learn later, that obviously technical analysis is only part of the process. But really the line number 2 is to make you believe that there is a magic strategy. So in 2015, when I started doing mentoring, I met this guy who actually is probably like any of you, who spent, you know, $5,000. He explained to me that he spent $5,000 in close to London for like a couple of days. That was on the Saturday, on the Sunday, just to understand how RSI was working. So more or less the strategy was to be buying stocks with an RSI below 25 and to selling stocks with an RSI above 75. So obviously he lost $5,000 in education, and he lost another $5,000 to $10,000 trading on that strategy. More recently, in terms of the magic strategy, that was, I think it was in February of this year, where I spent an hour explaining to someone what was the process of being a professional trader, having an investment process, what was required, going through the 4x4 video series. And he said, yes, I completely understand. And then 1 month later, I said, no, actually, I decided to go for another educator because I need to be making quick money. So I'm keen on spending $30,000 on their vacation program, because with those people, they have been telling me that I could be making 50 to 100% in the next 3 to 6 months. And actually, I need this money to be buying a flat to my mother. So what does it tell you again? This is about building, creating frustration to you and pretending that with either the broker or the retail educator, you're going to have a magic strategy. Line number 3, trade with the hype. So here, so I've been doing a simple Googling of trading strategy, and I want to show you the pattern. So the first pattern is obviously looking at Forex, then at crypto, then at options. So if you were starting to trade like 20 years ago or 25 years ago, the first thing that you'll be trading, and that educators and brokers will be pushing you to do, will have been Forex. Then, you know, over the last 5 years, most educators and brokers have been pushing retail into crypto. We are talking Bitcoin, Ethereum, you name them. And over the last 2 to 3 years, the game has been into the options. So we can see that, you know, you need always to be trading the hype, which is, you know, trading the product that is sold by most educators and by most brokers. And the reason is pretty obvious. If you look at Forex, then if you look at crypto, and if you look at options, the story is always the same. This is getting access to huge leverage and making sure that you sell very quickly a pretty big dream to people. And unfortunately, people fall for it. So let me give you some of the numbers to trade the hype. So the Forex, if you look at the regulation that is done in the US by the NFA, which is the National Futures Association, and that means you're going through a broker that is regulated in the US, you're still going to have a 50-to-1 leverage to trade the major currencies, and you're going to have a 20-to-1 to the minor currencies. So literally, if you look at the case number one to the majors, if you lose 2% on a euro dollar, let's say, your account will be over. So you'll be losing all your money. Now, let's look at what has been happening since roughly 2016, 2017. People have been telling you or buying the fact that, you know, I should be going into crypto because crypto is offering huge leverage. So if you look at any a broker that is not regulated, you're going to have leverage that could go up to 500 times. And that means, you know, you can be using 100 times leverage, mean that you can execute the trade that is 100 times higher than your initial margin. So that is, you know, Forex, crypto, and then since 2019, 2020, the hype is around the options, trading options. So this is the new El Dorado. What is very true is brokers and trading indicators will push the stories that sell, okay? So dream is to be making quick money with big leverage. And these days that has been trading with options. And the lie, it's even better now as you can be trading leverage on any underlying. So if you look at options, they're going to be options on ETFs, there's going to be options on stocks, there's going to be options on FX, there's going to be options on everything. So that means to you, the lie is, what about you going to be making money quickly on, you know, a stock like NVIDIA, or are going to be making money on euro dollar, and that with a lot of leverage. And obviously, all of this is confirmed by the numbers and by facts. So on the left-hand side, if you look at the first chart, this is the CBOE total products option volume. So it's more or less the number of daily options that are traded on the US market. Okay, so we went from 4 million that was in 2020 to an average of 7.5 million to 8 million. So we have been at 100% on the use of options over the last 3 years in the US. So that is first, you know, how much leverage is used by retail traders and how much we are pushing retail traders into using leverage. And the second chart, which is on the right-hand side, is, as you do know or not know, more and more retail traders will be using short-dated options. So we are talking to 0 DTE, which is 0 day to expiry. So this is a chart from Barclays, and as you can see, how these 0 DTE, which are here in let's say dark blue, have been on the way up and are making roughly 50% of the options volume. So you get two things here for the big lie, which is use leverage and use leverage very quickly to lose quickly your money, because obviously the brokers will be keen on you trading a lot very quickly. But the downside is obviously with that leverage, you're going to be done very, very quickly. So now line number 4, and I think this is very important, which is both the educators and the brokers will tell you first that you are shit, and meaning you are shit at trading, because they want you need to remember first that 75% again of retail traders will be men under 34. So what you need to do, or you don't need to do, but you know what the industry is clearly creating is you need to create action reaction. So you need to pretend first that you're going to be learning from the best. Okay, so you as a retail trader, you feel like very much like, sorry for my English, like a piece of shit. And you'll be looking at the best that are, you know, the supposed JP Morgan, the Goldman Sachs, the Bridgewater, the people that are pretending to have been managing 20 billions. But what you don't realize that most of those people that are pretending to be superheroes have never been traders. So I do know that there are many traders or let's say educators that are not pretending to be ex-traders, but in reality, there was only sales traders. So if you look at the FCA in the UK, for instance, which gives you a past history of what people have been doing in the past, the CF21 is for the sales trader, never been into traders. But unfortunately, you will see a lot of educators now these days that will pretend to be traders in the past. So this is creating action reaction, and all the tools will be used to feel you really bad. So again, as I said before, the money, the supercars, the gym, the alpha male, that is, all the picture, used to create some frustration. And the reality is, this is what I call the small Donald Trump of education, or the small, Tate of retail education, which is, again, you play with young male between 20 and 35, you create a lot of frustration, and you are obviously selling a lot of product to them, pretending to have, if they do the same as you, they're going to be creating a fantastic lifestyle. But the reality is, I mean, it's pretty obvious that, make no mistake, you are paying for their lifestyle. So stop believing that you're necessarily shit. Yes, you might be shit if you don't have any process, but what is really playing through the brokers and the educators is by telling you, your shit. So go with me, and they create really an action reaction process. Trading line number 5, the social media correlation, which goes more or less based on the point number 4, which is about those superhero traders, where you're going to be, unfortunately, following these days many educators and traders through social media. So before doing that, I strongly advise you to do a bit of fact checking when following those super traders accounts. So first question you should be asking yourself, are you really looking for real traders or social media influencers? So if that's the case, maybe it's going to be less expensive for you to be looking at people like the Kardashian, like the pretending so-called successful traders. Are you looking for traders that traded like 20 years ago? Because, I love when I see people saying, oh, I was trading 20 years ago, 15 years ago. But the reality, the market is totally different than it was 20 years ago, or even 3 years ago. So that is totally irrelevant. So the people will say, oh, I was trading in the 90s, so you can trust me. It's just another planet. Are you looking for confirmation bias? Any idea why most of them will be living in non-regulated places? So always funny that, most people will be trusting the lies of educators, super traders, so-called super traders that will be, on the Cayman Islands, or will be, somewhere in Asia where there is no regulation, where everything is pretty dodgy. And most importantly, many things that are on social media are fake, but people like it. And don't get me wrong, I got a 13-year-old boy who will be fascinated, by the numbers of subscribers that you have, the number of views that you have. But it's pretty obvious that you can be buying everything from views to likes. Give you an example. Today, I check of so-called very successful educators that telling you that how successful you can be at trading. He's got 460,000 YouTube subscribers, and on average, his views for videos are making 4,000. So try to connect the dots. If someone has got 460 and only making 1% of the views, if you're ready to trust these people, then there is really something wrong with you. So most of these are based on lies. Those successful traders by views, subscribers, likes, comments. And do you really think that you can trade and spending most of the time traveling to get perspectives? Or do you think that the way markets were trading 20 years ago are still relevant? So the reality, it's not about ditching your phone, but it's really about ditching the bullshit people. Trading line number 6, the hit ratio. And I think here we are going more into more advanced traders. So the lie for most of you has been you need to have a very high hit ratio. Otherwise, you go back to the point number 4, so you're shit. So what is a hit ratio? The hit ratio is the percentage of positions that have generated positive returns over a given period. So let me give you an example. So if you get 15 trades with 10 winners versus 5 losers, you're going to end up with a hit ratio of 10 divided by 15, which is 66%. So people will tell you, you need to have those 66% hit ratio or more. You remember one of the first points that we went through, which were the strategies where people were telling you, with me, you're going to have 80% hit ratio or 90%. And again, that is another lie of this market. So hit ratio on its own is totally pointless. So I really like this sentence by George Soros. It's not whether you're right or wrong that's important. It's how much money you make when you're right and how much you lose when you're wrong. So what matters the most, and this is the risk management. And I've been pretty clear over the years and in the 4x4 video series and in the mentoring that risk management is the most important thing. And don't get frustrated by your idea generation. I do know that saying that the risk management is key is obviously not very sexy, but the lie is to say that it is all about your hit ratio. Let me give you an example that I do use during the mentoring program. So if you get a capital of $10,000 and you trade once a week, that will translate in 52 trades for the year. In other words, for each trade, you're going to be putting 10% of your book. Okay, so if you get $10,000, each trade is going to be max limit of $1,000. So first thing first, your hit ratio is going to be considered by some educators very low at 33%. Okay, so that will be 1/3 winners. And to be more realistic, I'm going to be putting the average winners at 10%. The average loser at -5%, and the average flat trades, which is, the trades that you're not convinced, where you're changing your mind and you're going to be losing, let's say 1%. So first thing first, the winners, 52 trades, you take 1/3 of them, you're going to be making 10% out of $1,000. That makes $1,700. The losers, they're going to be losing roughly $866. And the flat trades are going to be losing roughly $173. So the total of your P&L for the year will be $693, which is, in terms of return, 6.9%. So let's look at the numbers. I'm not talking about, those stupid people that are pretending to be making 100% return, because this is complete bullshit. And if you fall for it, this is on you. I'm talking about the returns, about the expectation. So you only get 1/3 winners, but what is really important, your winners must be much bigger than your losers. Okay, here we are talking 2 times bigger. And actually today I quickly watched a video about something pretending to be making 100%. And the funny thing, there was 2 things that were funny. The guy was spending 10% every 6 months in terms of commissions trading. So more or less, it was the brokers making money and the educators selling him the brokers, 10% roughly over 6 months. So every single year, just by trading very actively, he will have been losing 20%. Then the second fact was, it was about, a 2/3 hit ratio, making 66% of the time winners. And the reality, if you go into the details of the numbers, is losers, the average losers were higher than the average winners. So in other words, when it starts to be bad in terms of ID generation, you're going to be losing money, and he's going to be losing money big. And I can tell you because, I find it funny to see those videos, because 5 years ago, I had exactly the same person who went through the same story. We went through the numbers every single year because he was very active and pushed by the broker and the educator to trade heavily. He was losing 10, 20% just by commissions. And then, he was losing 50% because his risk management was really bad. So now we go into trading line number 7, which is obviously you need to be a big swinging dick. And the reality is, when you look at trading, when you start in your 20s, you're fascinated by the legends of those big traders who are taking big positions. And we all started, or somewhere started, with a big swinging big trader. And one of them is obviously Soros, when, he went after the sterling. That was in the 90s. But why is it so important? And why is it such a lie? Because they the brokers and the educators want you to be big. First, for the brokers, obviously, because they want to be making good returns through commissions. And if you want to be making big returns, you want to be obviously very, very big. So if you look from retail traders to professional, the tendency has been over the years to talk about how much money you've been making. Okay, and that is another way of creating frustration, because in reality, that doesn't make any sense. If someone is telling you I made $1 million or I make a 10,000, it's all about the returns on equity, on the returns on capital. So there is nothing for me like the CNBC, people on CNBC, on Bloomberg, where they are quoting the Dow Jones or the S&P in points. Okay, like today the Dow Jones is down, 200 points. That doesn't mean anything, but obviously that creates frustration because you feel like it's always moving, that something is ongoing. So you could immediately tell that it is a lie when people go into the big story. And trust me, as a professional trader, I've been doing prop trading since 2009. Okay, so if you want to work in the industry, and if you do have like big P&L swings, okay, and I'm talking you're down 20%, up 20%, I can tell you 100% that you have no chance in the industry. Why? Because both in the hedge fund and the prop trading, when you trade professionally, you have limits per ID, per the underlying, per the sector, and there is no way that you can have those big swings. So you don't need to be big always. You need to be big when it matters. And obviously what is important, and that the industry, at least the brokers, are not telling you sufficiently, is you should not be averaging your losers. But, all of this is creating another layer of frustration. So trading line number 8, trading opportunity. Why is trading opportunity a lie? Because TVs, similar to before, brokers, trading indicators, they will tell you always to be in the market. So you need to be acting now or you will miss out enormous profit. So you remember probably the pump and dump that we had from many influencers, from educators, from brokers, about, trading the SPACs, trading the crypto spaces, trading the cannabis stocks. So these days, to a certain extent, we do have the same with artificial intelligence, where people are telling you need to be trading all those names. And the lie here is about to let you think that you always need to be in the market, okay? The reality, not doing anything is a trade. You don't have always to be putting a position, but for both the educators and the brokers, they want you to be always trading. You need to be churning your portfolio. So the TVs need audience, the Twitter need traffic, the brokers need commissions, and educators need to sell. So the only thing that it creates in you as a retail trader is the fear of missing out. And unfortunately, that is true for any market, because people will always mention, the stock that is up 20% or the stock that is down 20%. And if you look at the US, the reality, if you take 3,000 stocks, there will always be having, 10, 20 stocks that will be moving by 5, 10% more. But that doesn't mean that this is a trade. That doesn't mean that there is always an opportunity. So line number 8, trading opportunity, clearly that is one that is important. Trading line number 9, the trading secrets, which is very similar to having the best strategy. So what a trading secret about, what is a trading educator will tell you. If you join me now, you will get access to the special source, okay? And you probably, all of you have been through that, which is the brokers will tell you trade options at no cost, use CFDs with low commissions, and you're going to be making money. Why? Because it is so cheap, you can't be losing. Okay. And then you start trading, and obviously you start to be losing money because that is not that easy. So as I've been saying before, and I want to underline this because, it's very important to understand where the lie is at any point in time. Recently, the play has been with options due to the number of strategies. So if you look at options trading, the beauty of it is you're going to have 400 options strategy that you can deploy. As an educator or as a broker, there is nothing that to sell the lie that from one of those option strategies, you're going to be making money. And that could be, the covered call, the protective put, the iron condor, the calendar spreads, the ratio spreads, the long call, the butterfly spreads. So you'll see people over the last 3 to 4 years that suddenly will pretend that, you can be making a lot of money trading, options based on this strategy. And obviously, because options are not, let's say, the easiest product to understand, you will get lost. Okay, so I've been doing, that was last year, I did a mentoring program with someone before I did another mentoring program, and the person had no idea what he was doing. So he was trading options, doing some funny strategies with the lie of making huge money, but not understanding. So the lie here, I got a trading secret. Let me show you a bit of what it is. And, you're going to have 400 strategies with options. What about we do one together? So with the infinite strategies mean infinite bullshit or the infinite lies. Finally, trading line number 10, the crazy return. And I think, unfortunately, that goes back to the point number 1, where people in their 20s, 30s, you want to be making quick money. So I picked up some of the funny YouTube or going on different websites from educators. So learn how I turned $12,000 to 7.5 million, or the 200% bear market alpha, or the makes 50 times your money with this insane $3 strategy. So you from making a fortune in a bear market to make a killing in a bull market in 4 weeks. So obviously, this is all about clickbait, and clickbait. So yeah, I think it is important, to not always put the blame on the brokers and on the TVs and on the educators. If you're still keen on trusting this BS, maybe part of the blame is on you. So the question for you is, if someone is offering to you a 5% monthly return, you find it probably quite normal that his emails ends up in your junk mail section. And obviously, you will not open it. Now, what I'm surprised is, how can you trust people or some educators telling you that you can be making 50, 100% every single year? So let me give you an example of Bernie Madoff, which was who went through doing the biggest Ponzi scheme of all time. And I met him once. I worked for him for 6 months, not on the Ponzi scheme business, but on this family office business. I had no idea that it was running this business. So I met him. I had an interview when I joined the company with him and one of this son. And the view is, Bernie Madoff was only selling, which is already a lot, but 10% return on average every single year. Okay, so that means now you'll be like, okay, this guy, well, it was pretty obvious. Madoff was a big lie. No one could be doing 10% return every year, sorry. And now most of you will go for stories for people that were going to be telling you, oh, you're going to be making 50% return, 100% return. And if you don't, it's because you're shit, or because your ID generation is shit, or because you're too small, or because X, Y, Z. So obviously what you create as a broker and as an educator is you put the blame on the retail traders. I put the blame on you, saying it's all because of you. Nothing on me. It's all on you. So that's pretty easy. And think finally about something that is really important. The super traders of this world. We are talking the Soros, the super traders. Over the last 20, 30 years, on average, the best of them will be making 15 to 20%. Okay. And we are talking really superheroes. Okay. And on the other end of the spectrum, you are ready to buy any lie where someone is telling you, you're going to be making 30, 50%, 100% return. So I'm pretty sick of, explaining for hours on Zoom call to people, those are the returns that you could be expecting. and then they go for crazy, stupid returns. And then 6 months, 12 months later, they say, oh, Greg, you were right. But, you know, I wanted to go with it because, you know, I needed the money. I think I wanted to try. So first thing first, you're going to be losing money with education. And then like the guy that I met in 2015, it's not only the education that you're going to be losing money, you're going to be losing a lot of capital with those educators. Also with the brokers, again, because they want you to churn your book. So that was for the 10 crazy returns that I wanted to explain a bit of what I do, and hopefully I can do better than the average educator. First thing first, there is a Discord community. So now we are 400 active traders. There are 2 levels. There is a free channel for newcomers, and there are more advanced 20 channels for the 4x4 subscribers and the mentees. From time to time, I do ask me anything session. I do as well, you know, put some free content. Today, I put like a free Excel spreadsheet. So it's about, you know, trying together to grow as a trading community. The second product that I do, which is the 4x4 video series. So this is a video series that I built based on my 20 years experience as a trader. And as an educator, where you're going to get 40 plus training videos, 30 hours plus of footage, and more than 45 Excel spreadsheets. And it has been built for beginners up to advanced investors, where by using a step-by-step process, the series has been developed to make it useful to everyone. And the whole idea is to help investors along their learning curve. So at the bottom, you do have like some feedback that is on Trustpilot. I think so far it has been working well. And finally, there is the mentoring program, which is for more advanced people, where we do one-on-one online sessions on Zoom. So this is 12 sessions. It is about, you know, building your infrastructure, learning how to trade real money in real time, interpret macro indicators, use of top-down, bottom-up, active trading, and special situation, and trying to consistently generating positive returns. If you're looking for 50, 100, 150, 200% return in 6 months, unfortunately, this is not with me. If you go with those lies, then unfortunately, you're going to learn the hard way. And finally, for those of you who would like to get in the industry, this is about, you know, helping people building their track record for either their personal wealth or getting access to the industry. For me today, I hope you enjoyed those 10 lies. I think it's very important to understand that both the brokers and the educators need to create frustration and making sure that you trade a lot, that you trade big, to create the frustration by saying, okay, you need to be making millions. Look at me, I'm making millions. I'm the best. I've been working in the industry. I'm using options. And unfortunately, I can tell you, because I got the numbers after, it's pretty ugly. So don't go for those lies. If you get questions on the 4x4, the mentoring, if you just want to join the community, that will be great. If not, I hope that this webinar helped a bit. This is it for me today. And I will see you soon. Bye-bye, everyone.